Most people think reading a stock means predicting what the price is going to be or look like next, but that is just simply not true. And that mindset is exactly why beginners get overwhelmed and ultimately lose money in the stock market. Reading a stock simply means understanding what you're looking at before you even think about buying it. And once you figure that out, the whole process of buying a stock or ETF becomes so much more simple that you would never even have to think about it twice. Hey guys, welcome back to my channel. My name is Hadi, and over the last year, I've been learning how to invest my money properly. Not by guessing the prices, but by actually understanding what companies are doing. And I remember the first time I was looking at stock charts, and I was so intimidated and so overwhelmed by all the charts, the ratios, and all these numbers all over the place that I was just not trying to invest my money at all. So in this video, I'm going to teach you step by step how to understand a stock chart for beginners, so you know where to look, what questions to ask, and what you can safely ignore. This is the first video in my new series teaching people how to invest their money. So this is all about understanding, no buying, no selling, just clarity. Okay, so what does it actually mean to read a stock? Let's clear this up first. Reading a stock chart does not mean trying to guess tomorrow's price. It means trying to understand what the business is doing behind the ticker. When you open a stock chart, you're basically answering these 5 questions. What does this company do? How big is it? Is it growing? Is it making money or moving towards it? And how is the market pricing it today? Once you've answered those 5 questions, you're no longer guessing, you're informed. Think of it like buying a house. You don't just buy it because the price went up today. You look at the neighborhood, the size, the condition, and whether it fits your goals. Stocks work this exact same way. Before you even look at any numbers, you should be able to explain what your company does in exactly 1 sentence. How does the company make money? And if you can't answer that, then you probably shouldn't be analyzing the company. This is a great thought method to sort of filter out any potential bad decisions. All right, let's actually read a real stock together. This is NVIDIA, ticker NVDA, and I want you to forget everything that you know about this company. We're not here to decide if it's a buy or sell. We're just here to learn and understand exactly what's in front of us. If you can understand this page, you can understand any stock page. So first things first, what's the first thing everyone recognizes? It's the price. Currently it's sitting at 183 USD. And this is also where most beginners immediately get stuck. This number does not tell you if a stock is expensive or cheap. It just tells you the latest price that someone was willing to pay for the stock, right? A $10 stock could be way more valuable than a $1,000 stock. The price alone doesn't tell you the full story. The beginner's mindset is we don't ask, is the price high? We ask, what am I getting for this price? That's the mindset shift that everyone needs to adopt. So this is the chart. By default, you see there's a 1-day chart, and honestly, this is the least useful one. Daily movement is mostly noise. It's influenced by headlines, traders, and short-term emotions. When you really want to value a stock, you look at the latest 1 month, 6 month, or even year to date. Now, when you zoom out on NVIDIA, you see something important. Long-term movement is more often than not trending upwards, as is the case for NVIDIA. A stock being down today doesn't mean it's a bad company. A stock being down today doesn't also mean it's a good investment, right? Now, let's talk about one of the most important numbers here. It's the market cap. NVIDIA is currently sitting at 4.45 trillion. That is insane. Market cap basically tells us how big the company is. It's calculated by taking the stock price and multiplying it by the number of shares that are available with this company. But now with a market cap of over 4 trillion, this marks NVIDIA as one of the largest companies in the world. For NVIDIA to double its market cap, trillions on trillions of dollars are going to have to flow in, which is probably not going to happen anytime soon. But never say never, right? This is a tech company, and tech is extremely volatile, especially this day and age. Now, what else do we see here? We see the 52-week range. What does this tell us? Basically, it tells us what was the lowest price that this stock saw within the last 52 weeks, and what was the highest price that this stock saw within the last 52 weeks. So that kind of also gives you a good idea of the growth or even the loss that the companies are facing. So for example, NVIDIA is sitting at a low of 86 and a high of 212. That shows its growth more than doubled. And that is really, really good to see, especially for individual companies. But with tech, that's probably what we're gonna see with a lot of companies, considering how volatile this industry is at the moment, especially with the whole AI bubble and everything. Now, again, this isn't a buy or sell signal. This is strictly just information, but is definitely a good positive indicator. All right, now let's move away from the price and go into what actually matters about the business. This is NVIDIA's revenue. Revenue is simply how much money the company is bringing in. You'll notice something very important here. Revenue isn't just high, but it's also growing very fast with a positive 62% year over year. That is very, very good and super positive, and definitely NVIDIA is a buy currently from what we've read. This tells us that NVIDIA isn't just a popular stock, but it's a company that's actually expanding their business. And as a beginner, you don't need perfect numbers, you just want to see growth and momentum in the business itself. This is a positive reinforcement just for that. Now let's get into earnings. This tells us whether a company is profitable and how it's performing relative to expectation. An earnings beat, as you can see over here, means NVIDIA made more profit than analysts expected. This matters because stock prices move based off of expectations, not just results. Okay, now let's get into some of the valuation methods. So that you can see in this little section over here. And one very important metric is the PE ratio. So you don't need to memorize this, but this is what you need to understand. The PE ratio tells you how much people are willing to pay for each dollar of the company's earnings. A high PE ratio means higher growth expectations, and a low PE ratio means lower growth expectations. High doesn't automatically mean bad, and low doesn't automatically mean good. Valuation only makes sense when you compare it to growth, and that's something that we'll cover in a different video. Now, over here, dividends is sitting at 0.022%. Now, NVIDIA isn't a company that really pays dividends, so this percentage is significantly less than a dividend paying company. Although it isn't zero, so you still do get a dividend for holding NVIDIA, but it's so insignificant that it won't make a difference unless maybe you hold billions of dollars of the stock, which more likely isn't the case. Now, let's break it all together. NVIDIA is a massive company. It operates in a fast-growing industry, revenue is growing strongly, and the market is high with expectations. The stock is volatile in the short term, but long term, it is very, very strong. And this is essentially what it means to rate a stock. Okay, now I kind of want to break down my simple framework for how I analyze stocks, or individual companies at least. So this is something very simple, and I hope a lot of you guys can adopt this as well. I'm only here to answer 4 questions. What does the company do? How big is it? Is revenue growing? And is the price reasonable relative to growth? That's it. Nothing fancy, no fancy spreadsheets, no predictions, nothing even remotely close to any of that. And one easy way to also go about this is that you don't need to do any of your own individual primary research. You can fully rely on AI like ChatGPT because that's up to real-time date. And that is something that it's so underutilized when it comes to stock market research for beginners and experts as well. Now, once you've answered these questions, investing becomes significantly less scary because you feel like you're fully in control of your own money and your own investment decisions, which is ultimately the goal at the end. So learning how to read a stock is kind of like the foundation behind investing. And it's the difference between guessing and actually understanding. This video was about how to look. And as the series goes on, I'll continue to do my best to help Canadians manage and invest their money to their best of their ability. If this video helped you, like, comment, let me know, and I'll see you as the series goes on. Thank you.